James, you're going to take us into a nice analysis, and you're going to go a bit more technical in terms of the rand.
Andrew touched on a few of the points, but I think it's important to understand three things. And the first is that actually, if we look at fundamentals, that they do not drive cause the huge swings that we've seen in the market. So here, if we look at a producer price inflation adjusted rand from 1957 and 1970, and then here a trend line as well. That trend line, we're looking at an average 5.6% depreciation per annum. And based on inflation, we're looking at somewhere here over 11.50 or so, which is, we're almost there to the dollar. But that doesn't explain these huge big swings. Now, at this point, when we were up at 18, the rand was way undervalued. But we're starting to get to a point now where, we're getting to perhaps starting to be a bit overvalued. And it is starting to hurt exporters and so on, local manufacturers. But it's important to see the big picture, but that we won't get any direction from fundamentals for these swings that can last months or years. And then the second one, just you touched on that yourself, Andrew, is that actual news and events do not give direction. They're often a trigger, but as you see, you spoke about our two downgrades, that with both of them, the rand actually strengthened after that. So it depends where, we'll get onto that later, where sentiment is at the time, but you can't always say because there are positive things happening that the rand's going to continue strengthening. And then
is this the Elliott Wave Principle?
It does come into it, yes. It does come into it, yeah. Mm-hmm. And then just as you said, Andrew, that we tend to exchange at the wrong time. So this picture shows it quite clearly that the black line there is the dollar rand exchange rate, whereas the blue is our net investment position, which is foreigners investing in South Africa and South Africans investing offshore, and that net position. And as you can see here, when the rand was at its strongest, the persons were bringing the funds in. When the rand weakened, persons took money out. When the rand strengthened, they brought money back in again. When it was at its worst level in early 2016, that's when people are rushing for the door. Whereas it should have been exactly the opposite. When the rand's strong, well, then take your funds out. When it's weak, you can bring them back in again. But unfortunately, that's not human nature.
So what we're seeing at the moment, Neil, to answer your earlier question, is that the flow of capital out is actually slowed down a lot, and the rand is quite strong at the moment relatively. It's at a level last seen in April 2015. So really, it's a great time to think about making a sensible offshore investment now.
Yeah, so just what you're saying, Andrew, if we make an analogy of, if you understand what the market is negatives and positives, that it's like a seesaw. When persons move from being ultra rand negative, which we saw here in 2016, there was absolutely no one that you spoke to that was rand positive, except us. That was. But at that point in time, the sentiment is so negative that you've got rand negative. You've got exporters and foreign investors that are greedy and complacent, and you've got importers and South African investors that are fearful and panicking and taking their funds out. But it gets to a point where everyone is on one side of the seesaw. There's no one to actually push the market any further. And then slowly that seesaw starts moving back again until we get down to these points where everyone is rand positive. So everyone has moved from the negative side of the seesaw to the positive side. And at this point in time, there is no one left to actually turn from being negative to being positive. And that's why at these extreme points of either positive or negative sentiment, we tend to do the wrong thing at the wrong time, because at this point we ran positive and everyone that we speak to is feeling exactly the same way, and we think that rand can only go further, but there's no one left to push it further. And similar on the other side. So, just as Warren Buffett says, we need to be fearful when others are greedy, and greedy when others are fearful. And that's because our emotions are our worst enemy. So just as you're saying right now, Andrew, everyone's rand positive. It's at its best level in 3 years. A lot of persons saying, well, it can only go further. But can it? And that's what I want to share a bit with you, with all of you tonight.
So, James, we're emotional human beings. Everything we do is with emotion. It's absolutely emotion. Even when we invest, and we cannot deny it. And the underlying is how do we get control of this, or don't we get control? What is the solution?
Well, the first thing you need to do is to understand that your decisions are emotional decisions. And studies have shown that 90% of our decisions are emotional, and then we back it up we rationalize it with logic after that. And the first thing you do is recognize that, I tend to make emotional decisions. And because of that, I need some objective view as to, where this market is, to make educated and informed decisions so that they're not emotional decisions. And then that is in essence what we provide persons, is a picture of where we expect the market to go, an objective picture, so that you can offset your natural tendency to just make an emotional based decisions and use actual facts and objective forecasts that enable you to put the probabilities on your side, instead of, if you look at that other picture, 90% of the persons, we tend to invest at the wrong time. But perhaps just to come back to one of your questions earlier, Neil, was about the Elliott Wave Principle. And effectively, it's a discovery back in the 1930s, that what drives the market is emotion. And because of that emotion, the markets that you see is a reflection of the patterns of emotion in the market, which go from one extreme, which we see in the rand, one extreme of rand negativity to the other extreme of rand positivity. And you get this happening in various degrees, whether it's today or this week or the past month or the past 6 months, the past year, or the past decade. You get these various degrees of sentiment. So, for instance, we're more positive than we were 3 months ago, but if you compare it with 3 years ago, well, we're pretty much back to where we were. So what the Elliott Wave Principle is actually was a discovery of the rules, the laws that govern human behavior. And what we found is that the markets tend to trend, just like we got in nature itself, where you've got action and reaction, ebb and tide, growth and decay, that the markets tend to move in defined patterns in a trend and then a counter trend, and then the trend resumes. And that happens in larger and smaller degrees, and you'll see it happening in every financial market. And it's just a case of then finding out where you are in this pattern, most likely, and that will give you some probabilities as to where we expect the market to go from there. So when you just look at, as an example, that when we did this webinar 2 years, well, not this one, but we did with Scott Pick and Andrew 2 years ago. Yep. The Rand was sitting just below 17, I think. And at that point in time, we forecast the market to be heading down to, sort of 12 levels and possibly lower. And everyone thought we were crazy. And I said at the time, I don't know what's going to drive us. We've likely have reached an extreme. And everyone talking about the Rand going to 50 and 100 only confirmed me. But based on that, we needed a correction down to those sort of levels based on the Elliott Wave Principle. And that's all we used. And this was the forecast, the next few months forecast that we gave out at that point in time, with the Rand heading down like this. And that's, it was based on our analysis. That's pretty much what happened. And then last year, April, we did another webinar, April last year. And again, we are forecasting to move down to about 11.40 here. If you look at the longer term picture, in terms of those sentiment patterns, we've had here a 1, 2, 3, 4, 5, and then this correction, and then another 1, 2, 3, 4, 5. And based on once we've had that step up, we need to have a retracement, a substantial retracement of that move. And that's what we're looking for, is the market to head down into this level. And based on current updates, it could even go a little bit lower, just because of the sharpness of the move down.
And as we speak, it is sitting at 11.67.22.
Yeah, and we've hit 11.55, I think. So here was our forecast back then. We were saying 11.39. I'm not too sure that we'll get to that level right now, but if we just want to have a look at where we are, where we see we're going from here, I think you mentioned it too, Andrea, that it's not really only a Rand thing, because the dollar itself has been weakening since early 2017. But it is also due, if you look here, we've had a good substantial move down. We are now due for quite a substantial correction for the next couple of months. Longer term on the Rand, just to give you a picture, is that we now, here's the Elliott wave itself, that we probably see we are around about here, maybe a little bit lower, but we've got a bit further down to go before we have this extreme Rand negativity needs to be matched by some extreme Rand positivity. So I mean, we are at positive levels of positivity we haven't seen for some time, the last 3 years. So that being said, we are due for a correction. I see us bottoming out the next week. And we look at our next few months picture here, which was issued last month. This shows if you look at the black line here, we're expecting the market to bottom out and then move up probably close to 13 before we head further back down, going into the second half of this year. So we're expecting that for the dollar as well as the euro, as well as the pound. So again, I don't know what's gonna take it there, Andrew, but there's going to be some, for all three of those, expecting a bottoming out of the rand against the dollar, euro, and pound, and probably a month or two of rand weakness. But we're likely to get some, rand positive going into the balance of this year, which is, perhaps good for importers and the like, but not very good for the local economy, I think, if we get down to those sort of levels, because that's going to affect the manufacturing industry as well as exporters. And as you said, exporters is what has been helping us.
Yeah.
So where do you see the rand at the end of the year, Brent? Have you gone that far?
At the end of the year, if we look back here, I think we'll probably get into this level towards the end of the year, perhaps a little bit before.
Is that 11?
But I see that, once we've had this correction back down into that area, which we've got here is 1140 to 1027, and it could actually go a little bit further than that. Once we've reached that, we are then on a long-term weakening trend again. So, the next few months between now and year end is probably the best that you're going to see on the rand for, I don't know, next decade or two, I guess.
Wow.
Yeah.
Wow, that's a big call. So get your tax clearances ready and hang on a bit.
Yeah, but in the meantime, what you're saying, the rand in the shorter term, we're talking the next week. We're probably at the best levels we're going to see for the next month or two or three.